How to boost your borrowing power. This question is always a topic, I'll be honest. It's a topic that's especially pertinent these days because house prices consistently go up. Now, I've made this video as a part of my series for first home buyers. However, the issue of borrowing power kind of applies to everyone because it's how the bank looks at people and how they assess people for finance. If you are a first home buyer, feel free to go and look at this video, which we'll link at the end and in the description, which is on deposits. The reason why I say that is because you may have the income, you may have the borrowing power, but you may not yet have the deposit to be able to go and purchase the home you want. So deposit is just as important. In that deposit video, I go over a few different things such as stamp duty, first home buyer grants and schemes that are available, ones that are coming just around the corner. So there's a lot of different ways you can get into the market, even off a low deposit. I'm talking as low as 0%. So go and watch that video to go and figure out how much deposit you need. There are surprisingly a lot of different ways you can get into the market. Let's go to borrowing power. So there's a few different categories to borrowing power and how lenders are going to assess you. So I'm going to divide this into a few different sections. The first section is income. So lenders are going to assess your income. Let me explain something here, and it's not so much what you can do. People think, what do I need to do? Do I need to earn more income? Do I need to do this? Do I need to do that? Sometimes it's you just need to do nothing. You just need to pick the right lender that's going to assess your financial situation in the right way. Specifically income. Let's look at someone's payslip. Payslips can be more complicated than what you think. You know, a mortgage broker's dream is someone that just has a base income 36 or 38 hours a week and away you go. The reality is quite a lot of people work in jobs where there is overtime, where there is allowances, where there is commission or bonuses. They might be getting salary packaging. There could be a number of other things on a payslip. So let's address a few of those things because depending on how lenders assess each of those things can depend on what borrowing power you get at the end of the day. So let's talk about allowances and overtime. For example, a nurse or a construction worker, for example, that would be common for their type of job. Some lenders, because overtime and allowances they don't deem as permanent or stable, they might want to assess that differently. So what they do is they call it shading. So basically they take what you've earned for the year and then they cut it quite often by 20% or 30% or something like that. So there are particular lenders out there that don't care about that. They just go, okay, you're a nurse, that's a part of your role. We're just going to assess 100% of the income. And what that means is an increased borrowing power. Let's look at commissions and bonuses for salespeople or maybe people in management, something like that. Traditionally, it's been 2 years. Banks want to see stability in the income, so they would measure stability based on 2 years payments worth of commission and bonuses. Again, there are lenders that don't do that 2-year thing. There are lenders out there that will go off 6 months worth of commissions or bonuses so long as they can see them and verify them. And that, again, can be the difference between getting or not getting the dream house. What else is on your pay slips? You've got HEX. I want to leave HEX and whole debt to the end of the video because we've had some recent changes there which I've actually used several times within the last few months to get people that higher borrowing power. So I'll explain that at the end along with another policy that has just been announced recently, which I've also used to get someone into the property that they want. Salary packaging. I want to talk about salary packaging because it's more common than what you think. I'm probably going to butcher how I explain this, but salary packaging is generally for industries. It's a fringe benefit tax. So the government gives a tax incentive to people. For example, it's very common in the health industry, in the healthcare industry, I should say, and basically the government will give a portion of their income tax-free. Quite often this can mean 3, 4, 5k grand extra income every year because that's how much they've saved in tax. So some lenders are not very good at this and they won't assume that 3 or 4 or 5k extra income, and then other lenders will. In terms of borrowing power, it's between a ×5, ×6, something like that. So if it's $5,000 in tax savings per year, it's probably a 25 or 30 grand extra in borrowing power. So it's a significant amount. Unless you're kind of in the know when it comes to this stuff, it'll just get skipped. I guess this is why you use a mortgage broker. In terms of income, there's probably another couple of things here which I'll touch on, but I won't get into because it's just very complicated. So number one is casual income workers. You need to select the right lenders here. Some lenders won't take you depending on the situation. I'll give you an example. If you've only been in your job for 4 months, some lenders are going to say, no, that's not stable income. Some lenders are going to look at it and get a bit of an idea about the job type. Sometimes for particular jobs, casual based income is the norm. So long as you've been doing that over a period of time, lenders will look at that and potentially be okay with it. The other type of income is self-employed. Now, I could probably talk forever about self-employed income. It really is a big can of worms. Just for the sake of keeping this video a normal length of time, I'm not going to talk about self-employed. What I would say broadly in terms of income assessment, and what I really want to get across to you if you're looking to buy your first home or get finance, is that this is one of the reasons why you use a mortgage broker, because the truth is there's a lot of different banks out there. For your average person to go to every bank and get someone in the bank that's skilled at maximizing their borrowing power within that bank, and then going to kind of 6 or 7 banks you need to get to in some circumstances to get the maximum. It's not realistic time-wise. Also, it's not good for your credit score either. When it comes to that sort of stuff, you want to use experienced people to help you through the whole process of buying your first home. The borrowing power is just one potential part of that. What I would say is, if you need to talk with someone, the team here at Wilbell Mortgage Broker would be happy to help. Our links are in the description. The next part is other income. There's a lot of different types of other income. I'm just going to go over a few of the common ones that I see. So quite a common one is people that have kids. They might have Centrelink income. So there's several different types of Centrelink income. For people with kids, it's generally family A and B, family tax benefit A and B. Now, some lenders will take this income so long as the kids are under 13 years old. Other lenders, they don't really care so long as the income's coming in. So yeah, we need to be really careful with that one. And in the past, I've seen that one as a big winner. I've had clients come to me and they said the bank's only been able to lend me this much, but I've been able to turn around and go, hey, well, there's an extra 100K of borrowing power here because this lender will look at your Centrelink income. This also applies to child support income as well. If you've kind of split or anything like that, and one party's paying child support, so you're getting child support income. Again, a lot of lenders don't want to take it if they're under 13, if they're over 13 years old, I should say. But again, this can be the difference between actually getting into a property or not. There is one other type of income that can be used. It's something that one of the largest lenders in Australia has just come out. So far, it's been green lighted by the government, by APRA. I'll get to that later on in the video because it is a game changer. I've used this for clients the last few months. It's a gun policy. So before I get to that, I want to talk about how else you can maximize your borrowing power, and that is minimizing your expenses. So when a bank tries to figure out how much you can borrow, all they're doing is they're making an assessment on your income, which we've talked about, and making an assessment on your expenses. Maximizing income, minimizing expenses. That'll get you the most left over, which can then be used to go pay your mortgage. So how do you minimize expenses? Number one, if you're having a good time, you're spending a lot more than what you should be. Obviously, minimizing your living expenses is quite easy. What I've found probably the last 3 or 4 years is that hasn't been a problem because of cost of living and everything like that. People are a lot more conscious of the money that they're spending. However, minimizing what you spend is a good one. The other one is a lot of people don't realize is your credit card limits. Let's say you've got a credit card with a limit of 15 grand. The bank count that as an expense. You might be paying it off so there's no expense on it every month, no interest expense or anything like that. The bank don't look at it that way. The banks look at, okay, if you maxed this debt out because it's available, you can max it out. What's the minimum payment based on the most amount of debt you're taking out on there? So that can actually be quite a large amount. So something that is quite often done is those credit card debts, those limits are reduced by as low as you can get them to, or even cancelled. That's going to be an easy win in terms of boosting your borrowing power. The second thing you can do there is if you've got the ability to pay out any personal loans or car loans. Quite often I see first home buyers saving as much deposit as what they can, and they've got a personal loan at the same time. The reason they're doing that, you wouldn't actually do that to save the most amount of money. You would pay the personal loan off because you would save the interest on it. The reason why people do that is they're trying to save the maximum amount possible to give themselves the best chance to get into their first home or into a property full stop. Sometimes that's not the best idea. Sometimes it is. Usually what would happen is you would have a chat about that with your mortgage broker and they would advise accordingly. But yeah, it just depends on the situation. Sometimes it's best to close it. Sometimes it's best not to close it. That's pretty much it. That's the ways you've got of minimizing your expenses. Now, let me go to the two things I spoke about before. So one was the HEX or help debt or trade debt, whatever. They all appear kind of on your payslip there. There are situations now where some lenders don't look at them as a debt. Again, terms and conditions apply. However, what I've found is that I've been able to help borrowers get the additional borrowing power to get the property they want by using the right lender that will assess those debts either at zero or a lot lower in terms of what you're paying, and that will allow you the extra borrowing power. This is quite a new thing. It's probably only been around for 6 months, and a lot of people don't understand you can get this to happen if you're using the right lender. The second thing is potential rental income. Now, I've been running this business for almost 15 years. I actually remember when I bought my first home, which was longer than that, I tried to use rental income because I bought a place with 3 bedrooms. What would happen if I rented the other rooms out? And this is before I was a broker. The person doing my loan basically said, haha, you can't do that. Everyone tries to do that. And for the last 15 years, first homeowners, it's a question I get, can I use that potential rental income? So traditionally the answer's been no. However, recently we have had a large lender turn around and say, hey, we're willing to accept the fact that if you've teed someone up to rent that room and you sign off on that, so you sign a declaration saying that, okay, I'm renting this room to this person, they're going to consider a little bit of rental income. So that's going to boost your income, which means you're going to have more money to pay for a mortgage, and that's going to boost your borrowing capacity there. So again, some of these things that have come out in the last 12 months have made it much more flexible than what it used to be, say 3, 4 or 5 years ago, especially in those rising interest rates environments. Right now, things are looking as if they're getting a lot more easier with interest coming down and, being more friendly to HEX, being more friendly to potential rent. There's a lot more different options between the lenders in those things that I talked about previously. So if that's you, if you're trying to figure out if you're ready to go, again, links are below to get in contact with me. Otherwise, if you're just trying to figure out broadly the overall deal with buying your first home, I've got another video coming, so feel free to subscribe. And then the next video is about the purchasing process. So what's interesting there is this will be my take of the purchasing process from 14 years of helping buyers into the market. So I've got a particular view on things as the home loans guy, as the mortgage broker guy. The important thing to know about that is the mortgage broker doesn't get paid their bank commission until the deal settles. So we're in it all the way with our clients until settlement. It's not as if we're getting the loan approved and then we don't really have anything to do with it. We're in it all the way. So over 14 years, there's quite a number of things that you can see that I've been able to see as a mortgage broker that has been able to protect my clients in the process. And that's super duper important. So stick around for that. I haven't produced it yet, but it's coming. The deposit video should show on the end screen if you want to hang around for that. Other than that, feel free to pop some comments in below. Cheers.